Hello dear students, third problem we are going to work out fund flow statement. First problem, second problem we have done simple problem without adjustments. Balance sheet was given, we have prepared schedule of changes in working capital, adjusted profit and loss account and fund flow statement. Now today third problem we will take some adjustments also. Quite easy, nothing to worry, just focus on this problem. Now the problem is given to us 2 years balance sheet, 2016 and 17 years assets, liabilities are given. Now what are the adjustments? Depreciation and plant and machinery 20,000. Dividend, second one is dividends 12,000 to be paid during the year. Simple two adjustments are given. First thing, remember, from the balance sheet you prepare the schedule of changes in working capital. Already I have prepared. Now in this problem goodwill is given. Goodwill, it comes in the adjusted profit and loss account debit side. Debit side will write return of goodwill. The difference will be writing into the adjusted P&L account. Plant and machinery, it comes into the fund flow statement. Second one, current assets. Total current assets they have given. So assets, current assets I have written here 16,000, 19,000, 16,000, 19,000. Okay, it's increasing. So increasing side written 3,000. Next, coming to the liabilities, share capital. Share capital will be in the fund flow statement. Retained earnings. When profit and loss account is not given, you have to see the retained earnings. Retained earnings are going to take it as a opening and closing balances of the adjusted profit and loss account. Are you able to remember? Adjusted profit and loss account we are going to open with the opening balance of retained earnings and closing balance of retained earnings because profit and loss account is not given. Next, current liabilities, total current liabilities are given. So that's I have written here total liabilities 12,000, 3,000. Decreasing, decreasing means increasing side will write. Only two items are there, total current assets, total current liabilities. Then working capital is here, A minus B, total current assets minus total current liabilities. A minus B is 16,000 minus 12,000, 4,000. 19,000 minus 3,000, 16,000. Now netting working capital is here increasing. What we are writing? Net increase in working capital, difference between 16,000 and 4,000. So net increase in working capital 12,000. Net increase means we will write it on the decrease side 12,000. So if we total up changes both the sides, it's 12,000. It means schedule of changes in working capital is correct. Once if we have completed this, we'll write the answer here. Somewhere we'll write net increase in working capital. How much we got? 12,000. So this is, we got it already. Now what we'll do? We'll just rub the door. We'll make a space for the next stage, adjusted P&L account and fund flow statement. For schedule, from schedule of changes in working capital, what we need, net increase or decrease in working capital, that already we have noted. So we don't want this, I'm just rubbing to make a space. In exams also you have to write it in the same fashion. So like format and all these things should be very clear. Now we got net increase in working capital. Next thing is what we have to prepare? Adjusted P&L account. For preparation of adjusted P&L account, what we need? Opening and closing balances. Generally we'll take from the balance sheet opening balance and closing balance of profit and loss account. If it is not given, we'll take retained earnings. So retained earnings are 34,000, 26,000. Opening balance will be always credit side. So we'll write by balance brought down. How much? 34,000. Closing balance, lastly we'll write. If any transactions are there, that will write. Lastly we'll write the closing balance of the retained earnings. Now we'll see adjustments. First thing is that goodwill. Goodwill will be always in the adjusted P&L account debit side. Return of goodwill, return of patents, return of any intangible assets, it comes in the debit side of adjusted P&L account. So debit side I am writing Written off goodwill. How much is that? 30,000 minus 25,000, it is 5,000. After this, coming to the adjustments. Adjustments, first one's depreciation is given. Whenever depreciation is given in the adjustments, you have to open the account. Which account? That asset account you have to open. Depreciation and plant and machinery they are saying. So we'll open the account, plant and machinery account. Debit, credit. Remember, if you are opening any asset account, opening balance will be debit side, closing balance credit side. If you are opening any liability account, opposite to this, opening balance credit and closing balance debit. This is now asset account. Opening balance debit side will write. To balance brought down. Plant and machinery opening balance is 60,000. So 60,000 is written. There is a depreciation and plant and machinery. Depreciation always comes on the credit side of the plant and machinery account, credit side. By depreciation. We have learned even in depreciation chapter also. Whenever there is a depreciation, we pass a journal entry depreciation account attached to asset account. If you post it, it comes on the credit side only, right? So depreciation is how much? 20,000. 20,000. So opening balance is 60,000. Depreciation is 20,000 because it's given in the adjustments. Whenever depreciation is given, we'll open the account. Otherwise, not required to open the account, right? So depreciation amount is written. Now closing balance of plant and machinery is 50,000. Closing balance here we'll write. By balance carried on. Opening balance 60,000, closing balance 50,000. Now be careful here. You know it very clearly. Opening balance debit, closing balance credit side you'll write. And depreciation will be on the credit side. After this you have to see how much is the balance on the debit side and credit side. Opening balance is 60,000. Closing balance together it is 70,000. 60,000 to 70,000 it is increasing. Whenever it is increasing, we'll have to, what do we say? 60,000 to 70,000 it's increasing means it's a purchase. You know the simple logic. Whenever asset value is increasing means it's a purchase. Here also asset value opening 60,000, closing 70,000 means it's increasing. Increasing means it's a purchase. So balance debit side will write to cash account. In brackets we can say purchase. It's a purchase. How much we are purchasing? This is total 70,000 we are getting. Total is 70,000. Here also we'll write 70,000. Balancing figure is 10,000. This is purchase. Purchase of plant and machinery. Are you getting it? Then after that, we can come back to this adjusted profit and loss account. That is the depreciation. Depreciation of how much? 20,000. Whenever it is given in the adjustment depreciation, it comes twice. 2 times you have to take. 1 time in the asset account, second time in the adjusted P&L account. Please remember depreciation, most of the time you will get this transaction. So depreciation is given means 2 times. 1 time adjusted P&L account debit side, another time it will be in the asset account credit side, and profit and loss account, adjusted profit and loss account debit side. So we'll write here to depreciation. Depreciation on plant and machinery. How much is the depreciation? It's given 20,000. Same 20,000 and 2 times we have to take. 1 time is here, second time is here, 2 times. Depreciation is over. Now coming to the dividends. Dividends 12,000. 12,000 is paid. Whenever we are paying anything, that is debit side. This is just like a profit and loss account. Payments debit side, incomes credit side. So dividend paying, so we'll write it on the debit side. To dividends paid. It's 12,000. So anything else to write? We have to now close the account. Opening balance is returned earnings, opening balance 34,000. Closing balance is 26,000. 26,000 we'll write here. To balance carried down 26,000. That's it. Adjusted profit and loss account is over. Now we have to close and we'll see the balance. If you see, roughly debit side is more, 26,000, 36, 46, 46, 56, 57, 58, 58, 59, 60, 61, 62, 63. 63 is the total. Once again let me check. 26, 46, 46,000 plus 12,500 is 58,500 I am getting. Yes, no, let me check. 46,000 plus 12,000 plus 5,000, 17,000. 63,000, correct. It is 63,000. Now 63,000 minus 36,000, 34,000 minus 34,000. It is 29,000. You are getting balance. Total is 63,000. 63,000 minus this balance. You are getting balance of 29,000. 29,000 is here funds from operations. Funds from operations. This is balancing figure. Once if it is over, then what we need to prepare? Funds flow statement. There is a space, we can prepare funds flow statement easily. Funds flow statement. Here we write sources, amount, application and amount. First see from the asset side. Goodwill already over. Goodwill is written off here, we have taken. Now plant and machinery. Plant and machinery generally if depreciation is not given, then plant and machinery value is decreasing. Decreasing means sale. Sale means we could have written on the sources side if depreciation is not given. Now here depreciation is given. Whenever depreciation is given in the adjustment, we have to open the account. We have opened the account. Opening balance, closing balance, depreciation. Now balancing figure is 10,000. 10,000 is here. Purchases. Purchases means, is it a source or application? Source means getting. Application is payment. Purchasing. Amount is going out. So it's application. We'll write here purchase of plant and machinery. How much? 10,000. Please make it clear. Depreciation is given, so we have opened account. As per the account, the balancing figure, is it increasing or decreasing? That impact will be taking into the funds flow statement. Here it's increasing. Increasing means here purchasing. Purchasing means it's a application. This is what we have written. Plant and current assets already we have taken. Now next coming to the liability side. Share capital. Share capital is increasing. Increasing means it's a issue. Increasing means we are getting funds. We are issuing shares. When we are issuing shares, we get the funds. When we get the funds, it's a source. So we'll write here issue of share capital. How much we are issuing? 5,000. Difference 65,000 minus 60,000. So retained earnings already we have taken here, opening and closing balances. Current liabilities already we have taken. Now coming to the adjustments. Adjustments here depreciation is given. Depreciation comes twice. One time in the adjusted P&L account debit side, another time in the asset account. It's over. it doesn't comes once again in the fund flow statement. Remember, depreciation comes only 2 times, one time in the adjusted profit and loss account debit side here, second time in the asset account credit side, third time it doesn't comes. Any adjustment, it impact will be only twice, not thrice. So depreciation will not touch it in the fund flow statement. Second one is dividends. Dividends 12,000 paid. So this impact will be twice. One time in the adjusted P&L account debit side, that we are taken here. One time we have taken. Second time it comes in the fund flow statement. Second time fund flow statement. Dividend we are paying. Paying means, is it a source or application? Payment. Payment is a application. So we'll write it on the credit side. Payment of dividend. How much we are paying? 12,000. Everything we have taken. Now lastly we'll take the impact of net increase in working capital. Whenever net increase in working capital, its application. Net increase in working capital. As per the schedule of changes in working capital, it's 12,000. Next, after that, funds from operations. Funds from operations, always it's a source. We are getting funds. So, funds from operations. How much? 29,000. Nothing else to write, just we have to close it. If we close it, it is coming 34,000 here, and here also 34,000. Tallying both the sides, sources side, application side. When both the sides are equal, the problem is tallying. Simple problem it is. Simple 2 adjustments I have taken for your understanding purpose. This kind of adjustments only you will have in the exam, not much. At the most, one more adjustment you may find, but these are the common recurring adjustments. Most of the time it will be repeating. So remember this. Let me give you a recap. Whenever fund flow statement balance sheet is given, you have to observe the balance sheet. Each and every transaction from the balance sheet, it appears in the schedule of changes in working capital or adjusted profit and loss account or balance sheet or fund flow statement. Any one place it comes. So in this problem, goodwill is intangible asset. Intangible asset always comes in the adjusted P&L account. We have written off goodwill difference. Plant and machinery, if it is increasing or decreasing, according to that we will be taking into the fund flow statement. But in this problem, there is a depreciation given related to the plant and machinery. Depreciation of 20,000. When depreciation is given, you have to open the account. We have opened it. Opening balance, closing balance. Depreciation is written over there. So if you see the account, 60,000 opening balance, closing balance is 70,000 total together. It's increasing. Increasing means purchase. The balance will write it as a to cash purchase. In brackets we will write it as a purchase. So this purchase only will take it into the fund flow statement. Purchase means it is a application. We don't take the difference of these because we have opened the account by considering the depreciation, right? So that's we are taking. And now coming to the share capital. Share capital is here. Increasing. Increasing means issue. Issue means it's a source. Issue of share capital 5,000 we have taken. Retained earnings, opening and closing balances we have taken. Current liabilities already it has come in the adjusted P&L account. Depreciation also I told you 2 times impact will be there. One time is asset account debit side. Asset account debit side one time. Second time it will be in the adjusted P&L account. 1, 2. 2 impact. Next, dividends. Dividends impact will be 2. Adjusted P&L account debit side here and fund flow statement payment. Payment means here. Like 2 times. Once if you prepare all these things, a schedule of changes in working capital should tally. and fund flow statement should tally. That's a simple problem. Please take down this problem and work out by yourself, and take out your textbook, Himalaya publications, McGraw-Hill's, any publication you can take, and work out few problems, whatever taught you in the classroom, or you can work out by yourself also. The more you practice, it will be easy for you to understand fund flow statement. So right after completion of this fund flow statement, immediately I am going to start cash flow statement. If you understand this, cash flow is quite easy. So nothing to worry, studies are quite easy. Only the thing is we have to understand the logic. Especially in accounts, logic is very much important. What is this pro forma, where we are writing, and why we are debiting, why we are opening this account. Simple things, if you remember, it's easy. Now in the description box, lot of subjects, lot of topics are there. Please find it and make use of this. Exams are very much near, I know. Practice well, don't worry. You know very well, you are practicing, you are learning. Have that confidence, and wish you good luck. Take care.